All right, guys, welcome back to Everything Business. As was promised, today I'll be looking at a more complex income statement, right? And this one is entitled really adjustments to income statements, right? So in your textbook, it would be making adjustments to final accounts, right? Now, someone had sent me a message that they are having challenges making the adjustments to final accounts. And so this is the first of a two-part video where I'll be looking at the theory and then the practical. And then in the next video, I will be looking at the balance sheet, making adjustments to the balance sheet. So let's look at the theory, the key points to remember, right? When you are doing income statements, when you're making the adjustments to the income statements. So these are some key points to remember. Please remember to like, subscribe, and share, right? The subscriptions have been coming, but I realize that 81% of my viewers have not yet been subscribed, are not subscribers. So please subscribe. All right. So let's look at these key points. What you need to remember when you're adjusting the income statement is that nothing really changes from the start of the trading account, right? Nothing really changes. It remains the same. And if you have not yet seen my video on simple income statement and balance sheet, right, then I am going to put that link. You will see the link now, right? I'll put the link there for you to click on it and you can see those videos. And also at the end of this video, you will see the link to that video as well. And it's in the description as well. All right. So nothing really changes, right? Up until the point when you are finishing your trading account. You know that the trading account finish at gross profit, right? So when you reach the gross profit, that is where you will start to see a difference, or that is where you can start now making adjustments, right? So the first point here that I have, only adjustment that is in the trading account is to add revenues to your gross profit. You may ask, so sir, what are the examples of some revenues? So the common revenues that are used to add to gross profit are like discount received, commission received, reduction in provision for bad debt, and rent received owing. Please pay attention to that. Rent received owing. All right. And then now you need to remember these two terms. We call them accrual and prepayment. Very important, right? So an accrual is when you owe money, right? You owe something. Maybe it's an expense, right? It's normally expenses you owe. You don't pay off all the money. That is what an accrual is, right? And so you need to remember that in the profit and loss section of the income statement, we should always add accrual. I always tell my students, use the A. See it there? A and A, A and A, right? And if you know one, then you obviously will know the other one. So you always add accrual in the profit and loss section of the income statement, right? Then you go to know prepayment is the other term that is very important for you to know if you're talking about adjustments in the income statement. So prepayment is the opposite of accrual. Prepayment is when you pay in advance, right? So let's say you pay, you owe rent and you pay it in advance. So prepayment, you're paying in advance. And if we add accrual, then it means that we must subtract prepayment. And this adjustment is taking place. It takes place in the profit and loss section of the income statement. Another adjustment that you need to know is that how we treat increase in provision for bad debt. Now, provision for bad debt, right, is when we are making an allowance for a customer who may not be able to repay their debt, right? So that is why we make a provision. So we are saying just in case this customer is not able to repay, then we are making this provision. Provision for bad debt is a tricky transaction or a tricky item because if it increases, it's an expense, but if it decreases, it becomes a revenue. And that is why you see I have it here, reduction in provision for bad debt, all right? So if it increases, it's an expense and it would go in the profit and loss section, right? There are other expenses that you would know, like depreciation, you know, carriage outwards, discount allowed. These are all expenses that should go in the profit and loss section as well. So that's enough for the theory. That's really all that you need to know. Everything else is pretty much academic, it's pretty much what you have been doing already. So let's practice. All right, so let's look at this question that we have here. It's a more complex question, as you can see, right? So remember, the first thing that you do when you see a question is to read through the question. So we are given the trial balance of busy traders, right? Account, right? September 30, sorry, 2002, right? We are given the information. They're asking us, and if you look down the bottom here, right, this is what we would call footnotes, right? This is very important, right? The footnote, the fact that we have footnotes there, right? And I'll talk about it in a little while. So let us start. You start with your heading, right? So busy traders is the name, busy traders. So you have income statement for the year ended or ending September 30, 2002. All right. All right, so we have that information there. Good. Put in our dollar signs. Remember that you get marks, right, for all of these things. So, we start with what? Start with sales, right? And again, you always have to check to see if the sales figure is to be adjusted, and it is to be adjusted. So we're going to put it in the middle column. So we less returns inwards. And another name for return inwards is what? Sales returns. So it is 2,250. 2,250. And we do the subtraction, get the calculators out, people. So it is 112,500 minus 2,250. That leaves us with 110,250. 110,250. That is our net sales. So we move to the next heading now. Less cost of sales, right? And remember that this is just a heading, right? So we go with our opening stock. If you look in the trial balance, you will see the opening stock there. So the opening stock, right, always go in the middle column or the first column if you're only using two, 7,500. So we're going to add our purchases. So we add purchases. Before we record the purchases figure, you have to check if there is anything to adjust the purchases figure, such as carriage inwards or return outwards. And yes, I am seeing that. So the purchases figure needs to be adjusted, 52,500. So your less returns outwards, or we can call it what? Purchases returns, right? Always remember that. So less returns outwards, and the returns outwards in this case is 375. So you're minus 375, right? Minus 375, and that would leave us with, so it is 52,500 minus 375, well, 52,125. So that's 52,125. And then now we're going to add, right, carriage inwards. Remember that carriage inwards is also a case where you pay to get your goods delivered. So carriage inwards is right down here, 750, right? So you're adding 750 here. So 750. And when you add this, you're supposed to get 52,875. Right. So now we're going to add our purchases to get our cost of goods available. So our cost of goods available would be 7,500 plus 52,875. That would be equal to 60,000. Sorry, 60,375. All right. So that is our cost of goods available. Now we have to minus our closing stock. So let's closing stock. So the closing stock, you may say, sir, where do I get closing stock from? Sorry, this should not be there, sir. So you minus the closing stock. So closing stock is 9,000 and it's located outside the trial balance. Here it is. All right. Yeah. Now 9,000. Subtract it. So you're supposed to get 51,375. And that now is our cost of sales, which is what we're going to now subtract from our net sales to get our gross profit. So as you can see, there is really no big difference, right? There is really no big difference to the trading account, right? So you have 58,000 as the gross profit, 875. 58,875. So that's the gross profit. However, when you have arrived at the gross profit, now you have to stop, take a break, right? And look in your footnotes, look through your trial balance as well. Look for items that can be added, right, to your gross profit. So you have to look if there are any revenues that can be added now to your gross profit. And remember what I said, discount received, commission received, reduction in provision for bad debt, and rent received owing. These are the common revenues, right? So you look, those in the discount received, those in the commission received. Look in the footnote, rent paid, that's an expense. We should not use that there. So wages and salaries, insurance, provision for bad debt to be created. So that means that provision for bad debt has increased. So there are no revenues to be added, right? So you don't have to put this in, but if you had a revenue, you would add it there, but there is none, right? So there's none to add there. You get what I'm saying? Right. So let's move to the expenses section now. Less expenses, that is our next heading. So as in my previous video, you have to now go through your trial balance to put down your expenses. And a strategy that I normally teach my students is to use the footnote to guide you when you're doing the expenses section, right? So that you don't miss anything. So for example, I'm going to start with rent. The reason why I'm starting with rent is because rent is right here. It is the first expense in the footnote that I will have to adjust. I don't want to forget it. So I'm going to start with that one, rent, right? So in the trial balance, it says that rent is how much? 17,250, right? So you can do this, write it down like this, 17,250. It helps you to save space. And it says rent paid in advance. What do we call that? Prepayment. So you subtract prepayment. Remember that. So minus 2,000. And you put the figure there. So that would be 15,250. The next item in the footnote, as it relates to expense, is wages and salaries, right? Wages and salaries accrued, right? That means you're owing it, wages and salaries. Open a bracket. So wages and salaries, 16,500. And you add it plus 1,700. Close bracket. You put the total there. So you go 16,500 plus 1,700 would give you 18,200. So that's 18,200. Right. And do you know why we add accrual? If you know why, put it in the footnote, put it in the comment section. And if you know why we subtract prepayment, put it in the comment section as well. Insurance accrued. So insurance is another expense that we have to work with. We have to adjust. So I'm doing it, all the adjustments first. So I don't forget anything, you know? So insurance, if you look in the trial balance, insurance is what? 1,500. I'm going to add the 300 to it. So 1,500 plus 300, close my bracket, right? So that is now 1,800. All right. Continuing, using my footnotes as guide, provision for bad debt to be created, $300. So it's an increase. So you can write increase in provision for bad debt, right? That is 300. And finally, depreciation on machinery and equipment, right? And they give you an easy calculation. They say that they say 1,500 each. Well, 1,500. They have machinery and equipment in one, right? So this each should not be there. So depreciation for machinery and equipment. Depreciation is an expense, right? Which is 1,500. All right, so now we have utilized all of our footnotes in terms of doing the adjustments. So I am going to go back through now my trial balance to see if there's any what I call it, any other expenses that I would have missed. I already use wages and salaries. I already use rent. Drawings is an expense, but we use that in the balance sheet. We know that. Insurance, I use that already. Capital is not an expense. Premises is not an expense, right? But it's there. We're going to use that in the balance sheet. Bad debt is an expense, right? That we did not use. So bad debt, we used provision for bad debt, but we didn't use the bad debt itself. So that's 1,500, right? We have bank, creditors, debtors. Those are not expenses. We have carriage inward, which we use already. And then general expenses, which is the other expense that we have to use. General expense. So that is 7,500. All right, so now we have all our expenses and we have made all the adjustments. So now we can add up all our expenses to get our total expenditure. So it is 15,250 plus 18,200 plus 1,800 plus 300 plus 1,500 plus 1,500 again plus 7,500. That would equal to $46,050. $46,050, which is our total expenses figure, right? And now we are going to subtract that from our gross profit, right? Subtract that from our gross profit to get our net profit, right? So let's do it. So you have, I could have simply just minus it here now, but I don't want to mix up some persons who may not understand that method. So 58,875 minus 46,050 would give us a profit of 12,825. 12,825. And that is our net profit. And I'm going to go ahead and double line my net profit now. And I'm going to write net profit here. and highlight it. I'm going to bold it. Right, so this is my net profit. And let me just highlight it so for everybody to see. All right. And so this is basically how we do an adjustment to the income statement, right? Remember that if I had revenues, and I'm going to do another, question where I have revenues that I would have added to the gross profit. Join me in my next video where I'll be doing the adjustment for this balance sheet. All right. So I will see you in the next one. Walk good.